Hello everyone, good morning. Good morning, guys. Welcome to another exciting morning market review. This is Rally Trade Rally Academy. So we do this every trading day. So what we do is we try to analyze the market for you so that you can also always be in the profitable of the market. So welcome, guys, to another exciting section. I want to believe Monday, Tuesday, Wednesday, Thursday has been a great trading day for you. So we just have a few persons in the room right now. Just let's give room for more persons to join us so that we can have a full house, guys. Thank you very much, guys. That will just be maybe we're going to start fully in the next maybe 2 to 3 minutes. Let's give room for more persons to join us. And we have some newbies also joining us. So let's give room for them to make their connection right. Thank you very much, guys. So the next 2 to 3 minutes, we'll be starting fully. Thank you. Hello, everyone. Good morning. Welcome to another exciting session. I think we are starting right now. We have more persons in the room. Okay. So let's do a little sound check here. Sound check, sound check, sound check. Please let me know if you can hear me. Get to the chat room. Okay. Get to the chat room. Just let me know if you can hear me. Let me know if this connection is sound and, of course, strong enough. Okay, I can see you there, Elijah. Thank you very much. So that shows that you can hear me. Good morning, everyone. Once again, this is Rally Trade, Rally Academy Morning Market Review, MM. So what we'll do is we try to analyze the market for you in the morning, 3 days for Monday, Tuesday, Wednesday, Thursday, Friday. So when we analyze the market for you, we try to give you tips and tricks on how to navigate the market profitably. We also would like to give you previews and, of course, reviews of what the market has done in the past, which is very important, right? So it's very important to also consider what the market has done in the past. In fact, considering what the market has done in the past, we call a technical analysis, okay? considering what the market has done technically in the past. We call that the technical analysis. And of course, looking at the future events, right? The news, right? The fundamental events that can affect the market. We call that fundamental analysis. So simply put, two types of analysis that you can use as a trader to drive the market. Of course, in rally trade, of course, you know we drive the market, right? So we're actually teaching you how to drive the market with us. And of course, we all can be profitable, guys. So welcome once again. I'm reaching you from the beautiful city of Benin. Benin is quite cool today. And of course, I hope that it's going to remain like that. All right, guys. So just like we always do, we like to start from the fundamental analysis aspect of things, right? Because just like I always say, fundamentals have no respect for technical. So you may want to write it down. Let me say it again. Fundamentals have no respect for technical analysis. So that means you want to consider fundamental first, right? So let's consider fundamental analysis. So in doing that, I'm going to share my screen real quick with you. And of course, we can see how we can do what you're seeing on the screen. You know, what you see on the screen right now is make daily profit. And of course, so that we can see how we can make profit for today, or even be on the profit side of I just mentioned that I'm in the beautiful city of Port Harcourt. So guys, all right, let me share my screen with you real quick. So I've been able to share my screen. Please check if you can see my screen. Can you see my screen? So this is like, let me say, a ritual for us, right? So whenever you want to trade every day in the morning, the first thing you want to do is you want to quickly check the news events for that particular day. Like, but for me, I like to check the news event for the week, right? So that I can have the opportunity to prepare myself for it, and of course, take advantage of every move, and of course, be in the profitable side of the move, okay? Not in the negative side of the move. Now, most persons are in the negative side of the move. If you're in the negative side of the move, right? And of course, you know, when this market moves forcefully, moves some people forward, and of course, sad to say, it moves some people backward. But then, if you're in the negative side, now there's only there's exercising too much hope. If your analysis is wrong, you just need to cut short the losses, and of course, that's one of the secrets, cutting short the losses, guys. So quickly, this is one of the websites you can use for fundamental. Look at it carefully. It is called Trading Economics, right? So we're looking at the economic events across major countries of the world. So you can use this website, tradingeconomics.com, right? So you can just go straight to the calendar aspect of it. So once it shows you the normal news of the, so you now switch over to the calendar aspect of it. Okay. Now another website you can use is this one called forexfactory.com. Okay. So you just type www. On your browser, you type www.forexfactory.com, forexfactory.com. Okay. Now that's one other website you can use. Another website you can use is you can use my FX book, right? You can use my FX book. This is my FX book here. You can also use this website. There are several websites. You can equally use investing.com. Now, let's just stay with one so that we can run really quick. Let's look at what Forex Factory is telling us, right? Now, these are the news events during the course of the week. Of course, today is Friday, blessed day of the Lord. So this is Monday. There was, right? So if you look at it carefully, now, for those of us joining us for the first time, which I know right here in Benin, we have a lot of newbies joining us, okay? So if you look at it carefully, you notice this is the date, this is the time, this is the time of the day the news will be released. Nigerian time, right? West African time. For this is the currency the news will affect. Invariably, the currency you are to trade, right? Pair with any other currency. Then this is the impact, as you can see, impact. So our attention is usually drawn to the impact of the news, right? Our attention is always drawn to the impact of the news, right? Now, the impact, another word for the impact is the volatility. So our attention is drawn to high volatility. So you may write it down, right? So traders will always like to trade when volatility is high, right? So, and of course, we have this flag here, the red flag here is the high volatility, okay? So, and of course, on Tuesday, we saw red high volatility news, right? Then on Wednesday also, we saw another high volatility news. Now, the red volatility news or the high volatility news, among the ones you can trade and of course make enough profit for yourself is one we call CPI. You can trade CPI, you can equally trade PPI, right? So CPI, PPI, they are the high impact news you can trade. You can as well trade employment change, right? Employment change. You can as well trade GDP, right? You can trade GDP. You can as well trade retail sales, right? Like yesterday, 1:30 p.m. we saw retail sales, and of course it moved very well, right? And I want to believe you were able to make some profit from that retail sales, right? Don't deny me, you're able to make some profits, right? So, and I want to believe you were able to use the straddle method, right? The straddle method of putting a buy stop and a sell stop, right? Now I can equally explain that here, and of course show you how you can be able to take advantage of it, okay? Just in case you want to trade PCE. PCE will be coming up, I think that next week, personal consumption expenditure, now which is usually released 11 days after 10 to 11 days after CPI. So of course, I just guess that next week. So if you want to see the news for next week, you can just click next year. You can just click the calendar to see the news for next week. Then, of course, today, Friday, let's see what we have for Friday. So for Friday, by 12:30 a.m. today, we have the Reserve Bank of Australia. That's their central bank over there. Governor Bullock speaks, of course. That's on monetary policy. Then we have by 7 a.m. today, we saw retail sales from the UK, right? We saw retail sales from the UK, and of course, that result is out already. So the retail sales from the UK, look at it here, it came out as what? Can you guess? 0.5%, right? Worse than expected, right? So lower than forecast, which is 0.6%. Then, of course, for today, we have any red impact news, but guys, we have a medium impact news, right? Medium volatility news. And of course, this medium volatility news can also, following market sentiment, it can equally drive the market. So we have building permits here. That will be by 1:30, right? So that can equally push the market a little bit. Then we have by PM, guys, we have a medium impact news, right? Other website recorded it as high impact news. Website like Trading Economics recorded it as a high impact news. But for here, we have a medium impact news, and that is consumer sentiment, right? Looking at it's actually a survey, right, of a good number of consumers, asking them how what they think about the relative health of the economy, their sentiment generally about what is happening in the US. Okay. Now, there, of course, we have the University of Michigan, right? Inflation expectation. So this particular one is conducted by the University of Michigan. As you can see, it's a survey of about 500 consumers. Okay, asking respondents what their expectation is in the next 12 months. So that is it. So this particular news also has the capacity of moving the US dollar. Okay, so that will be by 3 p.m. Okay, so if you have a trade on this instrument, this currency pair, okay, you just want to have a stop loss and a take profit. Now, all of this news will not stop from taking your trade this morning, trading London session. Okay, so one of the sessions you can trade very well, and of course, you can see up for yourself is the London session, right? So you can start trading this morning, put your stop loss and take profits, and of course by that 3 p.m. if the trade is running, of course this will give it more volatility that is required so that you can push it very fast to your take profit and of course also your stop loss. Okay. So guys, I think that's all we have for fundamental analysis. So we switch over to technical analysis right now. Let me look if we have so somebody's asking how do you trade a non-data news? Very simple, guys. You just use the straddle method. One of the easiest way you can trade a non-data is to use straddle method. Now, if not, you may want to follow up that news on CNN or on Bloomberg. But one of the chance or one of the crises or one of the things you will face is that following up that news on CNN or Bloomberg, you may not be able to tell what the analyst is actually saying, or you may not be able to translate what the speaker is saying to either buy or sell. So one of the easiest method you can use to maximize profit is you just use the straddle method. Straddle method, I mean, if there is a non-data news, please, what we mean by non-data is a news, a speech, right? A speech at the non-data news, okay? So when you see a speech from maybe central bank governor, okay? When you see the FOMC press release, okay? They all fall under the category of non-data. So when you see a non-data news, you may just want to set a buy stop and a sell stop. You may just want to do that 10 pips away from the market price. You may just want to do that 10 pips away from the market price. That will help you, okay? So you said from the comments here, you're asking if you can explain the straddle. It's very simple. Let me do that real quick for you. So the method you can use to trade the non-data news is this particular one I want to show you guys. Are you ready? Are you ready? I think I've done this before. Let me do it again. Let me share my screen real quick. Do this so that we can switch real fast to technical analysis. So I want to believe you can see this screen, right? So one of the methods you can use to trade non-data news is what I'm showing you right now. You just ask for it, you have it right now. So this is non-data news. So what you want to do is you want to wait for the non-data news. Let's say it's a speech, right? Or even a data news. Okay, so these two non-data and data news, you can use this method and of course make point for yourself. The news of yesterday, the retail sales from the US dollar by 1:30 p.m. If you had used this particular straddle method, you would have been smiling by now. Make some profit for yourself, and of course, you can pay tithes. Okay. All right, guys. So if the non-data news or the data news is by, let's say, 1:30, usually we have it 1:30, okay, or even if it's by 7 a.m. or even 3 p.m. So let's say 1:30. So by 1:20, 1:10, you're already on your chart like this. Okay, well, let's say this is the market price as at that time. I want to believe you can see my screen. Can you see my screen, guys? Let me know. Can you see my screen? One or two persons, that will be enough. Okay, yes, you can see my screen. So let me continue. So this is the price at the time. So what you want to do is the strategy method is very simple. Just come to your come to your chart. You do a sell stop. You do a buy stop. You do a sell stop. Put a take profit. Do a buy stop. Put a take profit. That's all, guys. Very simple. Very simple. Sir, look at this screen very well. Do a screenshot, right? And of course, you know we are also recording this live on YouTube, right? Okay, so that means we are also streaming live on YouTube. So that means if you miss anything, you can come back to YouTube, Rally Trade on YouTube. Then, of course, you can watch it again for yourself. But right now, you can just take a screenshot. This exactly is what straddle method. Look at it carefully. Snap it, right? Do a screenshot on your phone, snap it. So that means straddle method is simply a few minutes to the news. Let's say it can be 10 minutes, it can be 20 minutes to the news. You come to your chart, whatever the chart is, And of course, if the news is GBP, come to GPUSD. If news is on USD, you can also do GPUSD. Just make sure you are doing it on the instrument as the news, that holds the news, okay? So you set a buy stop, you set a sell stop. Make sure you have take profit and stop loss, right? Now, make sure you have take profit, right? You may leave out the stop loss, but make sure you have take profit, okay? Now, one thing you want to avoid is that you don't want to place your buy stop very close to the market price, right? Now, you want to give a distance. That distance should be somewhere around 10 to 15 pips, okay? Don't do anything less than 10 pips. Write it down, sir. It must not be 10 pips. So that means you have a work to do. By the time you set this thing by, let's say, 10 minutes to the news, remember from that 10 minutes to the news to the time of the news, that 10 minutes window, the price will keep moving. So that means it's moving either towards the buy stop or towards the sell. So your job is to be on one click trading, keep on adjusting it, keep on adjusting it, keep on adjusting it to maintain that 10 to 15 pips gap. So once the news is released, guess what will happen? The price will massively move either up or down. So this is the kind of news you want to trade, right? This was the news of a few months ago. Once the news is released, the price will move with the high volatility news. So please, you want to only do this on a high volatility news, okay? Don't do this on a medium volatility. Chances are if you just pick your trade and of course reverse, right? And of course, you don't want that. You want a high volatility news, the one that can shake the market, the one that can move very well in a particular direction. Are you with me? Something like this. So let's say it can move very fast. It can equally move straight, hitting your take profit, or just move straight close to your take profit. And of course, you can intervene by closing your trade by yourself. So this is exactly what we call the straddle method. So I think I'm sure you've gotten some value from here. So you're saying showing half screen. Yes, that's exactly what I intend to show you now. So you say, sir, can once. Your question is, how would you be? How can one stay? So how, oh my God. So how long can someone stay in the market whenever the news is being released? So what we do with news, we scalp the news so you don't stay long, right? So it's actually a relative term, you don't stay long. So that means once you see profit, you should be out. If you see profit in the next 5 minutes, you should be out. If you stay as long as 15 minutes and you're seeing profit, you should be out. Now, once you do this, now you can quickly check. Now, another thing there is that once you have this straddle method and your trade is triggered, let's say you are seeing small profit, you're not seeing profit enough, right? But you're seeing small profits, right? And the price is still above your buy, right? And that means you are still in profit. Now, if you may quickly want to check, you may quickly want to check the result of the news. If the result of the news is actually favoring the buy that you are on, you may want to now stay longer, right? So don't just stay longer blindly, okay? Straddle method is almost a blind kind of setup, right? Because you are just setting it in such that whether buy or sell, you should pick anyone. It is profit we're interested in. We're interested in making profit. We're not interested in the BB grammar or in the setup. We're making profit, right? So once you see profit, and of course, if the profit is not big enough, now once you see profit, number one, you can get out of the market. Then number two, once you see profit, and of course, it's not big enough, you can quickly check the result of the news on Forex Factory. If the result of the news is favoring you, then of course, you may want to stay longer by adjusting your stop loss to protect your entry. So guys, this is what the straddle method looks like. Then of course, somebody will say I'm showing half screen. So this is just to show you, okay? So after this spike upward, this is exactly what happened next. And of course, the market moved all of it. So I'm sure right now you know say I'm showing you half screen again, okay? I only did that so that you can see and learn how you can trade with the straddle method. Remember, learn so you don't get hurt. Write it down. Learn so you don't get hurt. Now, if you learn this straddle method, you'll not be hurt by the market. So, guys, I want to believe you got some value. And of course, I've been able to take some of your questions. So right now, we are going to switch right now to what's it called, to technical analysis. I think we have done we have used up to how many minutes now? Wow, almost 10 minutes on this. So guys, you've gotten some value. I'll switch over to technical analysis right now. So let's do 30 minutes, 30 minutes here, 30 minutes there. That will be fine enough, right? 30 minutes on fundamental analysis, 30 minutes on technical analysis, all right? So just a moment, let me switch my screen, please. So guys, I don't know if you can see my screen. Check if you can see my screen. I have switched over to technical, to the chat, right? So we're on the chat right now. That took some time. Sorry about that. Check if you can see my screen. So you can see my screen. I am on the chat right now. And of course, guys, okay, you can see my screen, right? So my analysis is usually what I call market structure analysis. So market structure is simply looking at what the market, the footprint of the market, right? So that means we are following, hello guys, we are following what the market is doing. In fact, I call language of financial markets. So that means we are looking at, once again, the analysis is called market structure analysis. So market structure analysis is simply following the footprint of price, footprint of price, footprint of price. As we are following what the structure of the market looks like, hence the word market structure. So, sir, whatever you're seeing on this screen is simply what we call market structure. So, the most important area of the market structure is the market trying to create some new highs and lows. So, as you can see, this is a high, this is a low. Guys, can you see my screen? Are you sure? I just started my analysis and of course I'm seeing everywhere USDC, USD card, USD this, USD that. That is not how it is done, okay? Okay, so you just follow through. Then of course later you can drop your question. All right, so guys, the analysis is usually from USD index, right? So why we USD index first? Because if you want, if your trade is on US Euro USD, it has a lot to do with USD index. If your trade is on GP USD, it has a lot to do with USD index. If your trade is on CHF, it has a lot to do with USD index. If your trade is on US 100, also USD index. So most of our trade up to 50 to 80% of our positions is just around the US dollar. Around the US dollar, I can tell you that. So if it's around the US dollar, so it means if it's around the US dollar, it means we should first analyze and know what is happening to the dollar, right? You agree with me? So look at what's happening to the dollar right here. I will do this really quick. This is the low it established. And of course, we crushed that low to the downside. And of course, before that low were established, you notice the market was breaking structure to the upside. But guess what? We took out this structure to the downside, and of course, we started going down. Now, please, this time will not really be enough for me to teach you what market structure is, so, but I'll just analyze it for you, okay? Now, if you are the type that you really want to learn this structure Emmanuel is talking about, so after now, I'll drop a number, you reach out to me, and I'll give you a video that you can watch. I hope you can hear me, guys. Now, I'll give you a video you can watch, right, that will in great details explain all of the structures of the market. Now, because if the market structure is broken, the market have shifted to either the upside. Now, breaking of structures, I mean, if the market has traded or high, it's what we call breaking of structure. It means two things. Number one, it means there is momentum in direction, or it means the market is shifting to a new direction. So two things. And of course, those two things is what traders we need. We need to know when the market has momentum in our direction, or we need to know when the market is gradually shifting to a new direction. If you know when the market is gradually shifting to a new direction, what do you do? You either close your trade and I'll take this new trade in the new direction. But if you don't know when the market is shifting to a new direction, chances are you will still be hoping. You will be hoping that the market will continue in your direction, and hope that kind of hope will not succeed or will not give you success. You'll be hoping and the market will just be doing its thing. So guys, we traded below this low from a new low, right? That means the market have shifted to the downside. So if it has shifted to the downside, it means US dollar is now officially on a downward trend. I mean, the direction is officially down. And if the direction is officially down, that means we are going to see a lot of weakness in the dollar, okay? So of course, it traces, of course, that is what the market would do after moving downward. Then of course, it tried to impulse again, but guess what? It did not take out this low, right? Which is somewhere in the middle. Then of course, it did a little retracement here. So officially, this high has not been taken out. That means officially US dollar is still weak technically, right? So technically, you can tell your friends, tell anyone that cares to know that US dollar is officially weak on the H4 time frame technically, right? Why? Because we have not traded above this high. If the market trade above this high, then of course you're still going up. Don't forget, we have been falling right from 104. We fell from 104 to 102. So that means this particular instrument is actually sinking, right? It's sinking. But guess what? There's one with the US dollar. Come on. Even though it's sinking, it can spring up surprises. Okay. Now this analysis is actually for a swing trader because it's on the H4 time frame. So Euro USD, let's start from Euro USD, guys. Are you ready? Euro USD, you can make profit from Euro USD. Look at GBP then we start considering some of the instruments we want us to go through. Okay. So guys, which one is this one again? So let's use this one and analyze what Euro USD is doing. Okay, so Euro USD on the H4 time frame. This is the H4 time frame, guys. What does it look like? It looks as if it's going up or down. Which direction is this thing going, sir? Let me engage you a little bit. Let me know what you're saying right now. Is it up or is going down? What you're saying, are you? Thank you for those of you following me. Just continue to follow this analysis. Thank you very much, guys. So it's going up, right? So why do we say it's going up on the H4 time frame? It's going up because we can simply draw this structure that looks something like this. We have a very great impulse to the upside, and of course we have a movement, a detour in the direction of the trend, a retracement to the opposite direction. Then of course we have another again that was able to trade above this high to form a new high. Guys, this is what we call the market is still going up. So guess what? We're able to trade above this high to form a new high. Trade above this high to form a new high. We call that an impulse. So the impulse is still very strong, guys. Still very strong. Now remember this on H4 time frame, right? Now, why are we doing this on H4 time frame? We want to have an idea, right? We want to have an idea what the big money is doing. I mean, what those people that have, those traders that have bigger money, they fund, right? The banks want to have an idea, the kind of what they are seeing, right? So they are seeing Euro USD pumping to the upside. How do I know? Of course, you are breaking structures to the upside. Guess what, sir? Then after that, we saw a retracement here. This is a retracement. You notice the market actually retraced past my 50%, right? So this retracement is a healthy retracement, right? Because it passed 50%. Of course, that is a discount. The market has offered us a discount because the last momentum we saw is called the break of structure to the upside. So the momentum is moving to the upside. So we saw a discount, right? And of course, this is where you can enter your trade and of course target this high. So guys, this is one way you can just do analysis here, and you will not be wrong. So technically on the H4 time frame, it's going upward. That's what we can see. But then if you know that it's going upward, so what you do is on this H4 time frame, since it's going upward, they will drop down to a lower time frame for retail traders, right? 90% of my listeners are retail traders, okay? So you may not want to stay with this particular time frame analysis. The reason is we are trading, most of us are trading with small money. I mean, we put small stop loss, right? So you may not want to place the trade on this particular H4 time frame. You may want to dive down, go deeper to a lower time frame that will just be 15 minutes. So on this 15 minutes, you also want to analyze your trade and of course place the trade, bearing in mind that the higher time frame, before time frame, is still very much on the upside. You see, having these two things in mind makes you or makes you a profitable trader, right? It makes you a profitable trader having these two things in mind. The H4 time frame on the upward trend, right? So that means on this 15 minutes time frame, now we may just want to look for opportunity to buy, right? So if you look for opportunity to buy, it means you are still following the higher time frame on the lower time frame, right? That's wisdom. That's wisdom. Now, in fact, in trading, we call that the top-down analysis. Top-down analysis. That means you analyze what they have, and of course, you drop down to a much lower time frame and also do your analysis there. So, guys, now I'm seeing a local support right here. Remember, if you want to buy, you must buy on the support. Don't forget that. If you want to buy, you must buy on the support. So, guys, I'm seeing a local support here. This is a local support, right? And I want to take my trade there. Then also I am seeing the open of the day, right? I'm seeing where the price opened for the day, right? So these two areas are areas of demand, right? These two areas are areas of demand. So this is the low the market created before where we are right now, right? Then of course the market also created this low. Now these lows are actually the Asian low, right? So chances are the market may want to tap the liquidity in that Asian low before going up, right? Chances are the market may want to tap liquidity in that Asian low. So these two lows are very important. So what I would likely want to do is, since the short time frame is going upward, I will still want to buy. That means my directional bias on this particular Euro USD will still be a buy, but I want to buy when liquidity has been tapped, right? I mean, when the market has taken out this low or this low. So guys, turn your Euro USD to 15 minutes time frame. Once the market trade into these lows, I want to do a buy trade, right? Once the market trade into this low, you notice the market tried to tap this low, right? So these two lows, in fact, let me just give you the price. Now, if the market trade into 1.09691, you do a buy, right? If the market trade into 1.9691, so you do now you can even set a buy limit, right? Buy limit is you setting a trap on the market at a better price, right? At a better price. A better price is a cheaper price. If you like, a better price is discounted price. So a lower price, I mean. So if the market comes lower into this area, then of course you set a buy limit here. Then your take profit should be targeting this high. Let me just do it for you really quick, so that we can leave Euro USD. So this will be your buy limit. This will be your take profit, right? So you target this local highs. Target this high and this high, right? Then of course your stop loss will just be now actually this low is supposed to be a stop loss, right? So if you use this low, you're already trading 1:1, but you can actually use a much lower stop loss, right? So that makes it maybe 1:4, 1:5, right? You can see. So this is a good setup for you guys. Now, one other reason, something that can boost your confidence to take this trade, guys. Look here, it can boost your confidence. Even on this lower time frame, we have seen break of structure. Come on, guys. We have seen break of structure. Now, see what I mean? The market traded this high, of course, established a new high. The market also established a new low. The 15 minutes time frame, guys. Now, the market traded much higher, took out this high, violated this high, and of course, to form a new high. Now, forming a new high, we call that a break of structure. So the market have broken structure to the upside. Now, even on this lower time frame, we have still seen momentum to the upside. And of course, we analyze USD index, we saw weakness. So guys, you may want to take Let's look at GBP. I don't know if it's Sophie Coco. Coco. I like that name, Coco. Say, please, I didn't get the price we should buy. Hmm? Look at it now. You don't even need to get the price now. I know you should be seeing this screen now. Eh? If you turn your now, please now don't just get price only. It will not be looking like you are only copying and pasting. No. Uh, give a man fish, they say, in the local palace is better. So teach a man how to fish, they say in the local palace, is better than giving a man fish. So if getting the price is me giving you fish, right? Even though I like that. Now, but knowing where to enter your the trade by yourself is me teaching you how to fish. I said this low you're seeing right here, right? This particular low on a 15 minutes time frame is the Asian low. That means the lowest price got during the Asian session. The market is divided into 3 sessions. Asian session, all through the midnight, late evening, midnight to early morning. Then by 7, we have the London session. For after London session, then we have the New York session in the afternoon. So, sir, this low is the Asian low. So, usually during London session, the market can tap the Asian session, gather more momentum to start moving in the right direction. So, this particular low, let me call the price for you again, 1.09684. So, you got that right. Continue with jet speed. Now, let's do I would like to do GPUSD, but I don't know. Somebody is saying we should do GBP JPY. So who have trade on GPUSD? Now my custom is GPUSD, EURUSD, GPUSD before any other instrument, right? Because even me myself, I trade GPUSD and EURUSD. Those are the two I stay on. Okay, you want me to do GPS? Emmanuel, my namesake. So GPUSD weekly, guys. Are you ready for this? Okay, so good 18. If I'm too fast, guys, we are recording this also on YouTube. You can also get to YouTube. Then, of course, I have some videos I can give you market structure if you so desire. Now, on GPUSD, guys, this is still H4 time frame. What can we see? Let me engage you a little bit. Remember, it is also giving you entries. It's also previews and reviews of what the market is doing. So GPUSD, guys, what can you see? Tell me, what can we see? Is it going up or is it coming down? Is it up or down? So guys, GPUSD, this is up, 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 up. How do we know it's up? Because guys, this now fundamentally, USD is weak, just like we have said, right? Fundamentally, is weak because we are expecting a rate cut, right? We are expecting a rate cut on the dollar. So because we're expecting cuts, everybody just is showing carefully, is showing already on the charts, right? It's showing everywhere that the dollar is weak because see the dollar now, we have dumped, we have really dumped, guys. So see, let me show you this. We have really dumped from where? Look at the dollar so that you can know that this is weak. This dollar was trading somewhere around somewhere in June. It was trading around 105. Now see 105. It's trading around 105. Now in August we are trading around 102. So that's a big dump, right? That's a big dump. So we have been expecting this rate cuts, and of course, most likely by September we are going to have a rate cut. See now, it dumped from 105 to where? 102. So that's the weakness, guys. That's really weakness. So weakness for the dollar means all of these USD denominated currency pair, I mean GPUSD, for example, they should point it to the upside. It's just like we're seeing right here. So, and of course, now, I think the other time I was here, we did one analysis on GPUSD, if you can remember. Some of you can remember, right? Now, I think that was when GPUSD touched 1.3, right? It touched 1.3. Then, of course, we said something, those of you that can remember. We said this is the first time in the year 2024 it is touching 1.3. And whenever it's touching a very high price like that, it's usually a bubble. Some of you can remember. It's a bubble, and if it's a bubble, then it can burst at any time, right? It can burst. So look carefully. Look at my chart. I'm on daily time frame. This is February. This is January this year. You can see around July we touched the highest price for the year, right? And 1.3, right? Around July we touched 1.3. And then I told you something, that anytime we touch a very high price like that, or anytime we have traded above the highest price for the year, that price is a bubble. So what happens to bubbles? Remember, we say bubble will burst. So this is a burst to the downside, guys. So take note. These are some of the things that you can have in your in your cabinet, right, or in your arsenal, right, that you can use to be hitting the market big. So that means anytime we crush the highest price for the day or the lowest price for the year, or anytime we have gotten to a very high price. For example, the first time Amazon got to 1 trillion US dollar market capitalization, that was a bubble. That was a bubble. The first time Google, or let's say Facebook, the first time Facebook got to 1 trillion US dollar market capitalization, guess what again? That's another bubble. Guess what? It burst. That means it fell, right? The market cap fell far below the 1.2, the 1 million, and of course, but hitting that high price is that that territory can be conquered. So that means we can. Then later on, of course, the price is good. But it's a bubble. It means it will fall. It will fall, and it fell very well. Now, the reason why this is that if you have a negative trade and then you notice that surge bubble, you may want to still stay longer on the trade. Most traders will just be staying longer on their trade, right? Knowing why they are staying longer, or why they are babysitting, or why they are not seeing the negative trade. Now, but if you have this knowledge, you may want to even go and borrow money, so that you will not lose the account. Borrow money, put inside it, because of you have the knowledge that if this thing is a bubble, then there is a high probability that it will burst. By burst, I mean it will reverse. And as you can see here, it reversed very well to the downside. And of course, that can help you save your account. Okay, guys, I think I'm going to delete because of value from that explanation there. So that means during the course of this year, if we trade above this high again, that's another bubble, right? To believe you're able to understand that because of this year, let's say the next 2 to 3 years, if we trade above this high to form another new high, let's say above 1.32, 1.35, that's another bubble. Guess what again? We expect it to burst. That means we expect it to trade to the downside. So guys, you know that, let me drop down to your choice time frame, and your choice time frame is 15 minutes time frame, so that we can see what we can do on GPUSD, trade, and of course, so now from what we are seeing right here, we have a very strong push to the upside, guys. This is 15 minutes time frame, guys. Adenuga, I like that name. You say you're interested in market structure. Well, just hit me up. Nah, I don't mean physical hitting, okay? I mean chat with me, okay? I'll drop my number. I'll tell you the video and watch. You say, what is a demate? You say, what is deep? Deep is not DP, sir. Deep, DIP. That means market nosedive. The market went down. That means the market went down. So okay. If you're interested in the market structure video, chat with me, and I will give you the link so that you can watch it. Okay. So guys, let me show you something, guys. This structure is going up. Very simple. We just look for a retracement to the downside. Of course, we can take our trade from there. This is an order block. The market have the local order. Okay. So remember, if the market have broken structure to the upside, we're looking out for buy opportunity. Don't forget that. For buy opportunity on GPUSD. Now, this is the open price of the day, right? These are another entry. So these two entry, right? These two entry. So you can buy if the price tests this level again. That's 1.28690. You can buy if the price tests this price again, right? And that will be a day trading a retail trading, that means a short trade, okay, or a scalping trade. You can buy at 1.28690, or if the price drop again during the course of the day to 1.28540, you can still buy, right? Why? We are booking structure to the upside. So look at this move, a sharp move to the downside, followed by a sharp move to the upside, right? So that is simply what we call a momentum, right? To which side? To the upside. Why? Because let's say $2 million, right? Sold to the downside, it will take more than $2 million to reverse it. Okay, so that means the buyers are really in control. I understand that explanation. If $2 million push this price to the downside, take more than $2 million to push it to the upside, right? So that means the buyers have the control. The buyers are in control. So we are looking out for buy opportunity, and of course, on the higher time frame, H4 time frame, we are already seeing a break of structure to the upside. That means the buyers have the momentum, sir. The buyers have the momentum. You're only looking out for opportunities to buy. And what do I mean by opportunities to buy? Opportunities to buy is simply the market offering you a discounted price. That means if the market trade lower, the market paid lower. You understand that very well. Now, those of you interested in break of structure video, and of course, by the time you start trading with the right break of structure, you will notice that your trading will change, right? So let me show you this for example. Look carefully. Just imagine you were able to catch this opportunity. Oh, this. Look carefully. Just imagine you were able to catch this opportunity. Which opportunity? Let me show you carefully, sir. Now, look at this opportunity. The market is diving, trading downward. I want to believe you can see this movement downward. Just imagine you were able to catch this opportunity. Look at this opportunity. It was going down. Just imagine you were able to catch this move to the upside. This move to the upside. This move to the upside. Understanding market structure. Understanding where market have shifted from the downside to the upside. We call that a reversal, right? It's commonly called reversal, right? But in market structure language, you go shift. Now, if you're able to catch the shift of the market structure, then you can be able to catch this move early. Now, what do I mean by that? Now, the market was trading down. I mean, it was breaking structures to the downside, something like this. See what I mean? We're breaking structure to the downside. Then before long, we shifted to the upside. So once you understand when the market is shifting to the upside, of course, now hopefully you notice we shifted to the upside. What do I mean by we shifted to the upside? See what I mean by that. So this is a low that is lower than this low. This is a high that must be respected. Now, for the first time, the market violated that high. I mean, if you like, disrespected the high. Of course, that's a shift. So that means we have started trading upward. Of course, the market will put in a little retracement. So that means if you're to catch the move, this is where you start catching the move, not from here. It's from this particular area you start catching the move to the upside, right? So by the time you're trading with market structure, you can tell where the market is actually in the momentum in the particular direction. You can tell where the market have shifted to the new direction. Of course, you now start doing your buy. Now, so this zoom this area very carefully. Watch carefully. You notice even inside this area, you still be doing what we call intraday trading. I mean, so just watch this structure. If you have the knowledge of market structure, don't you think you would have taken advantage of this? Can't you see that the market is giving you higher highs? Now, most times, most persons just jump and live where the market is easier and jump to an instrument that they are struggling. Can't see now? Can't you see? This is the easiest place to trade whenever the market is doing something like this. Higher highs, as it's popularly called. Higher lows. So anytime the market puts in a low, give discount, you hit it. Put in a low, give you a discount, you hit it. So guys, let's do one more instrument. Let's look at gold. Please, for both Euro USD and GP USD, buy, don't forget, right? We have a buying bias. So, but we're not buying instantly. We are waiting for a discount. By that, I mean, we're waiting for the market to give us a little retracement so that we can hit it big. So guys, you understand that carefully, very well. Let's move on. Let's look at gold. Gold here real quick. Now, this instrument gold is poised, right, to move to the upside, right? Remember, with a declining US dollar index, I mean USD index, gold should be pumping upward. Now, gold is one instrument that you can do swing trading on. If you have good capital, sir, you can do a buy on gold and go and sleep. Eh, if you have good capital. But if you don't have good capital, don't do it, oh. Oh my God. Let me say it again. I say gold is one instrument that you can do a swing trading on. Let me show you this. One can actually swing on this gold, right? Because from analysts that I am following, gold is poised to get to 2,500, right? And of course, gold is trading around 2,400 right now, right? So during the course of this year, gold will certainly get to 2,500. So it will just be doing all of this daily up and down, up. But guess what? It is creating higher highs. It is creating higher highs. Now the market is structured in such a way that it is moving in a particular direction without showing you that it's actually moving in that direction. That is why you will need enough knowledge, guys. So watch carefully. Now, if you notice, we traded above, we tapped this liquidity because we traded higher, right? Right? This high is higher than this high. The momentum is on the upside. It's on the upside. So that means so we are looking for buy opportunity right here, right? Now I have a strategy called MACD Boss, right? MACD Boss. Now, if you're using MACD Boss, this is where you'd have entered this trade, right? You'd have entered this trade just when the candlestick is above our 50 period moving average. And of course, we have seen break of upside. By that I mean we have seen this move to the upside. See a low, right? And of course, we got a high, right? Then we got a low. Now, being able to to see these things is what makes you a technical analyst. So we traded above this high to form a new high. So once you trade above the high to form a new high, then of course using this moving average, the price is right. The price is above our 50 period moving average. The MACD has just turned from MACD is a momentum indicator, right? So the momentum is showing that the buyers have the momentum. So this is where the buy is supposed to start from. The buy is supposed to start from here. And of course, we ride all of this thing to the upside. Now, but then that one has passed. Let's look at what is happening right now. Now, this is H4 time frame, right? Even right now, the MACD is showing us buying momentum. And of course, if you buy, your stop loss should be below this. So your take profit above. As you can see that, right? But if you buy on this H4 time frame, remember it's a long trade, right? The H4 time frame is a long trade. If you place a trade on H4 time frame, in the next 15 minutes, don't come and be checking, am I in profit? Or you're worried. No, now you don't do such thing. Now, if you want to do such thing, then you go to 1 minute time frame. Go to 1 minute time frame, place a trade in the next 15 minutes, you should be worried. The higher the time frame, the longer you allow the trade to run. So let's do 15 minutes time frame so that we can look for entries here. So guys, this is 15 minutes time frame. Even on this 15 minutes time frame, the MACD is already showing us a buy momentum. But have we seen break of structure to the upside? I mean, have we seen the market traded above any recent high? That's the meaning of break of structure, guys. Have we seen the market traded above any recent high? Yes, sir. Yes, sir. What I mean, this is a low, right? So this is a high. Now this high is lower than this high. That means we are going down, right? I mean, it's going down. Now we traded below this low to form a new low, right? Then of course, that's the definition of the market going down on the lower time frame. They traded this much, right? Then of course, we were able to put in this what we call relatively equal low, right? So we put in this relatively equal low. That's a sign of loss in momentum because it was not able to trade below this low. Then, of course, we now traded above this high to form a new high. So this is a shift, right? This is a shift. So whenever you experience a shift, you wait for a retracement because the market is now offering price. So if you want to buy, you wait for a retracement. So any retracement around this level, sir, I would like to buy. So if market retrace around level, this level is like an inverted order block. I would like to buy anywhere around this price, guys. 2456. So you may want to set your buy limits around 2456.42. So set your buy limit at 2456.42. And of course, your stop loss will be below this low, 2450.16. Your take profit will be targeting this high. So you either target this high at 2464.95, or you target this other high at 2470.24. So guys, that's for both analysis. Guys, let me look at the question here. You guys, okay, 89 guys, we're able to do some of the major instruments, and of course, so let me drop my number here so that I can get to class. I have another class, right? Physical class. So that I can rest more and get my physical class. I would have loved to analyze more, guys. But from the analysis, you can as well take out the juice out of the analysis, extract that juice, understand it, take it to another event, check for break of structure. Break of structure means the market trading above the highs, so the lows. And of course, that is a sign of momentum, okay? So 09026264507. Please, this number is number one for WhatsApp, okay? Okay, don't try to call, please. Don't call, just do WhatsApp. Then, of course, I will give you a link where you can go and watch market structure. Thank you, guys. So it's actually for WhatsApp, okay? So WhatsApp. My name is Emmanuel, okay? This is not for everybody. Okay? So guys, 09026264507. Okay, you may want to do WhatsApp, please. WhatsApp. All right, guys, thank you very much, guys. If I don't respond immediately, it means I'm in a class. I will respond during the course of the day. Thank you, guys. God, may the market be with you, and of course, God be with us. I like that. Guys, join us on Monday again for another exciting session. Bye for now.